I'm looking at comments that just moved just now, and it's from Esther George, I think the Kansas City Fed president, who says the time has come to dial back extraordinary Fed easing. The message being sent this week, Carrie, is tapering is coming sooner rather than later, at least as some see it. Who knows what the Fed chair ultimately does? And he's going to speak later this month at Jackson Hole, and that's going to be a key speech. And then the September meeting may be the first inkling of the taper. Is the market going to be cool with all that?
Well, the Fed has been signaling that this is coming, and people who watch the market have a full understanding that it.
Not this explicitly.
I understand that, but the market, if we think through what's happened with interest rates, a few months ago, everybody was saying that rates would be over 2%, and they looked like they were heading that way, and then they fell back to 1.2, or even slightly below. So the actual market has not been so demanding of money that it was pushing rates higher. There's a lot of cash on corporate balance sheets. There is more cash than banks are able to lend. They're having trouble making loans. Growth of loans has really been much weaker than one would have expected at this level in a recovery. So I'm not sure that the market has to worried to the extent that the bears would suggest about the tapering. Because, yeah, that tapering is coming. But we know that Jay Powell is very interested in the level of employment and what GDP is doing. As much as they're caring about inflation, which they would like inflation to be in the 2% range, and inflation, is currently high, but, who knows what's going to happen over the next 6 months. I don't think we've got a lot of fear about rates running through the roof and there being a big correction as a result of rates. As a matter of fact, a point that was made, I think, Scott, you said, don't we have to worry about tech? Remember that the big technology companies, they don't have to borrow a cent. They have billions and billions in cash, and their balance sheets will benefit if rates go higher because their interest income will go up. It's small companies where higher interest rates for a company that's not earning any money for the next 5 years, that will affect the valuation of those companies much more than Microsoft, Apple, Facebook, where those companies don't need a cent. They generate so much, Google, so much cash flow.